Hey, peace. Welcome back to another episode of the Money Codes. As you can see, the display is a little bit different. It's not just me on screen. I actually have my good friend Tanya from 720 FICO Club. So very quickly, what we're going to do, and I got my handy dandy paper here of my notes. What I want to do on this episode, I want to go over like the high level macro view of what it really takes to like build credit, right? So on this episode, if you're new to this channel, we talk about like specific credit card products. We talk about credit repair, disputing. We talk about credit building products. So anything that's like personal finance related, we talk about on the channel. However, sometimes we may get a little bit too granular. We might get a little bit too like specific on the product. So on this episode, I want to just zoom out. So if you're somebody that's new, brand new, you don't know anything from anything, here are some tips that's going to actually help you like start from ground zero. You don't know anything, right? And you want to start to build your credit, or you want to maybe repair your credit, right? So what Tanya and I are going to do, right? I have my list. We're going to do our top five, and she has more than five, right? So I'm going to give you my top five tips that you need to do, and she's going to do hers. And I think what's going to be interesting, I want to just hear like a different perspective because everybody's probably already heard like my take on everything. So I'm excited to have you on just to give you like a different perspective to the audience. So Tanya, give us a little intro about yourself. What made you get into credit? What made you become like a credit nerd like me? Like, give us a quick breakdown on your background.
Sure. Well, thank you so much for having me, first of all. I appreciate it. And I got into it probably for the same reason a lot of people have. I had bad credit, 499 credit score. And the aha moment was when I went to a car dealership. My car broke down, went to the car
Mm-hmm.
dealership. They tried to put me in a brand new car, and the finance came back at, like 10 years ago, 21%. And I said, oh my gosh, that's like one whole paycheck.
Right.
Right now, back then I had the struggle job, and I was like, whoo, sweating bullets. And then they don't want you to leave the dealership.
Yeah, to keep you
So
trapped.
I think I was there for hours, and I finally was like,
Yeah.
I gotta go. I almost got that car, but I mean, my debt would have been even worse because there was just no way. It was literally going to be a whole pay.
Yeah.
And so I said, I've got to do something. And I initially hired a company,
Mm-hmm.
and it was a very long process. 18 months later, times $100, I had really paid into some credit. And they didn't tell me like they couldn't do any more for me. I just kept paying and paying and paying. And they did
Yeah.
a decent job. And then, got my credit score up, and then went to the dealership, was able to get that car for, 1.99% interest versus the 21% the year
Mm-hmm.
before. But I did not have the education piece. And so
Yeah.
I went out and applied for every card, racked everything up. Credit score went right back down to 499.
Uh-huh.
And
Uh-huh.
so this time I was like, I don't want to spend 2 grand on credit repair. I don't want it
Yeah.
to take 2 years. Let me just start educating myself. How do I repair my own credit? And from there, it just took off. I repaired my own credit and then realized I really enjoy learning
Mm-hmm.
and doing this on my own. And I want to help others because I know what it's like to have bad credit and the
Yeah.
effects of that. So that's got me to where I'm at today.
That's dope. I like that. I think most people can probably relate to that. I say this a lot on this channel. Your story was the credit dealership. Mine was being an on-site agent and seeing
Mhm.
like people over and over and over again. The first time they even figured out like what's even on their credit report is
Mhm.
a lender has to say, right? And then
Mhm.
that's their like education is right when they're trying to buy something,
Yep.
right? So I'm similar to you. I repaired my credit twice on two separate occasions. Early 20s, I was just young and stupid, just swiping, 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 right?
Mhm.
Everybody had the same story. More recently, I had one where it was kind of different. I had a good career, had a good paying job, and I
Mhm.
kind of, and this is one of my bullet points, but I kind of like forgot all of the principles of how
Mhm.
to build a good credit. So what I was doing is I was just paying cash for everything. I was
Mhm.
paying cash. So
Oh.
my car paid cash, had a nice little spot in the city, paid like everything was just nice. And then one hiccup happened, and I'm like, oh, I need to see what my credit is looking like. check my credit, and it's like, oh nah, I got work to do, right? So that's going to be one of my spoiler alert. That's going to be one of my points. But
Mhm.
even when you do the right things to get your credit right, like you can't just be like, okay, well I got a 750 credit score right now.
Mhm.
I don't have to think about it. I'm just going to whatever. Like
Mhm.
you've got to maintain it because you
Mhm.
never know when you're going to need it. Like everybody see what happens with COVID. Like
Mhm.
nobody predicted a pandemic, right?
Right.
So if anything unexpected happens, like you always want to make sure, even if you are somebody that subscribes to like the Dave Ramsey, just be cautious with debt. Like you never know when you're going to need credit. So it's much better to work on it now, have
Mhm.
it. And if you don't need it, you don't need it. Cool. But it's always best to just have the foundation set up first.
Yes.
So that was good. That was good. So what I'm gonna do, I'm gonna set it off. I'm gonna set off with my notes. So number five, right? And this is not necessarily like in order, but you're going to see as I go into it. So number five, I have secured card, but the caveat is I want it to be from a major bank or a credit union, right? So I think a lot of people like if your credit is bad or if you have no credit, sometimes you're probably going to get maybe something in the mail or maybe something in the email, and you might get tempted to try to apply for like one of those subprime cards, right? I believe First Premier was one. I forget the name, but I may end up just putting that on the screen. But there are some subprime cards where the interest rates are over 30%, right? They're
Mhm.
not issued from a bank. So you're like, okay, I get this card. It's 33% interest rate. You're paying on time month after month. Your score is getting better, and then 9 times out of 10, everyone that says the same thing, they're like, okay, well, I kind of outgrew this card, or this isn't a financial institution where you can go back and try to get another card or a better card or do a product change. You're not able to do that. So what I say is try to get a secured card from one of the big major establishments. I got a whole bunch of videos on Navy Federal.
Mhm.
To Discover It is another good one. Even the credit unions that are like, I guess, near you, like in your local area, because there are regional credit unions as well. So I highly recommend that you get that because number one, you're going to build a relationship. You're going to start getting positive payment history.
Mhm.
Um, you're not going to be you're not going to be like tricked into getting like you remember like the My Jewelers Club and like all
Yeah.
those right these
Mhm.
jewelry type of accounts
Mhm.
where they'll put like a $5,000 trade line or sometimes it was like
Mhm.
7,500 or however. But after a certain amount of time, like the credit bureau, sometimes they wouldn't even allow that to continue to report. So you're spending hundreds of dollars
Mhm.
to open up the account, buy these jewelry products, and then it may only report on one credit bureau.
Mhm.
You get what I'm saying? I would rather somebody take those funds, those two, three, four, $500, whatever they were going to spend, and just put it down. Get yourself a Navy Fed if you're able to get it. Get yourself a Discover. Get yourself just a basic branch credit union or a bank card, and then in 6 months, 12 months, however long it takes, they're going to give you your money back, right? So you can just continue to do this. You're going to nurture that relationship. You're going to get positive payment history. You're not going to have to be worried about, oh, is this trade line going to disappear from my credit reports in 6 months because
Mhm.
TransUnion is like hating on everybody, right? I
Mhm.
remember the backlash from My Jeweler, so that's why
Mhm.
it's fresh in my mind. So to me, I think that's the solid way to like you don't know anything about anything. What's the best way to like use your first few $100s? Mine would be secured card from a major bank. Coming out the gate. Coming out the
Ooh,
gate.
yeah, and I'll tell you, I know someone that because of their relationship with their credit union, and they did not have good credit, but they worked on their credit. The relationship they had with their bank allowed them to get funded for a home. I think their
Yeah.
credit score was like a 650. It wasn't even,
Mm-hmm.
700. And they were able to move up in their credit card. And that was from their relationship, the rapport that they had established with the bank and showing the bank over the year or two, on time payments, things like that. So
Mm-hmm.
that's good. I'm going to kind
Mm-hmm.
of piggyback off of that and say with the credit card, keep your utilization low. And that was one thing I did not know the
That's
first
good.
time I paid to get my credit repaired. And I went out and I got every kind of major card, and then I charged things on cards. I hadn't even heard of credit card utilization. I
Yeah.
didn't realizing that I was maxed out. My credit score tanked again, and I couldn't figure out why. Well, I didn't realize you're supposed to keep your utilization, they say 30%, ideally at 10%.
Mm-hmm.
So, and I do tell people, because I see people with maxed out credit cards. And if you don't have the funds to pay it down to that 30% or 20% or 10%, baby steps. If it's at 100%, get it to 90% utilization, then get it down to 60%, and then get it down to 30% credit card utilization. And with each of those markers, you're going to see your credit score boost. You would be surprised when you pay a credit card down how much, your credit score will go up. I've seen credit scores go up 50, 75, 100 points just by paying a maxed out credit card down to 30%.
Uh-huh. Very good, very good, very good. I agree with that. And that's actually on one of my lists as well. My number 4, I put goodwill. Like some of these are combos. I got goodwill letter / dispute. I want to emphasize more on the goodwill letter specifically, because everyone already knows about like sending the dispute or quote unquote 609 letter or challenging. But I think people sleep on like how effective a good goodwill letter is, right? So if you're not like aware of it, I know somebody I spoke to recently. She was with, I think it was Capital One. She was with Capital One for years. Something happened with her bank. I don't really know what happened, but she had a 30-day late, right? But everything else was cool. All she had to do was write out a letter, and it doesn't have to be anything like super crazy, like a whole page. It was just a very basic letter she sent over to Capital One, just asking them to remove it. And I think specifically she said something like, I'm in the process of purchasing a home. I'm trying to remember what the actual letter said. I'm in the process of purchasing a home. This was like a one-time thing. There was, a mix-up. I'm a great customer of you guys. I've been with you guys for years, blase, blase, blase. And then within a matter of weeks, it was removed, right? And she saw, I think it wasn't like a crazy point increase, but when the lender was looking at her file, it looked better because she didn't have a recent late that was, popping up. So I would say a goodwill letter. Now, whether or not is it going to work 100% of the time, it may not work 100%. Really, there is no strategy when it comes to like disputing or sending out letters, because the person that is making the decision isn't you and I. It's either the financial institution, it's either the collection company, it's either the credit bureau. Like it's always a outside third party that's going to decide like, yeah, I'm gonna do this, or no, I'm not going to do this. So I still say like it takes no more than 3 minutes to go Microsoft Word, write out a few sentences, send that out. And you may be surprised that some of these things that you're trying to dispute and you're in Credit Karma trying to remove, and you're spending all these months, it may just take a single letter, send that out, and I can get that derogatory item off of your account. So that's what I got. Number 4 is goodwill letter.
That's good. You don't know if you don't ask.
You don't know if you don't ask.
So piggybacking off of that, my number 4 would be put your bills on auto pay so that you don't incur the late payment. And, even if it's just the minimum payment, put it on auto pay. And then if that way you're not going to pay late. And if you can pay $5 or $10 more just prior to your payment being debited, on your due date, any little extra you can pay is going to help. But yeah, auto pay, that'll be your best friend for avoiding late fees.
How come I didn't think of auto pay? Okay, that's all right. That's a good one.
We get busy, in this day and age, and you got a lot going on, and sometimes you forget. But in that forgetting to pay a bill can be a 50-point decrease to your credit score. So
payment history. That's the biggest piece of the pie. So that one missed payment, if you see your credit score drop 60, 70 points off of one, that happens. So you are correct on that. So let me piggyback off of yours. So my number 3 is credit monitoring / because I got to put / on everything. Credit monitoring / maintain usage. So what I mean by that is it's kind of like how I started off this video saying, like, whether you're trying to like repair your credit or your credit is in better standings, you got to find a way to like make sure that you understand what's on your credit report pretty much at any given point in time. If the only time you're interested in knowing what's on your credit report is if you're in the office of a lender or you're at the dealership, you're already behind the eight ball. They already have the advantage. You get what I'm saying? Like, we want to be so savvy. Like, if we're going in, I have a video about this. Did I record that or not? Did I record that? I don't even know if I did, but I have one where I'm talking about going to the credit unions, getting the loan from the credit unions, coming into the dealership, and kind of posturing yourself with the check and the money that they already have instead of going to the dealership, letting them pull your credit multiple times, multiple hard inquiries. And then they're not even going to give you like the best rate, right? Because the dealership has their own relationship. So the rate that they're going to give you is not even going to be the best rate. So I don't even know if I recorded that or not. But anyway, you got to make sure that we do our homework beforehand. So whether that be smart credit, right? I know we both use smart credit, and I actually did a video with one of the reps with them, I think 2 days ago, and I'm going to post that at some point. But something like a smart credit, if you're really gangster, signing up with my FICO, right? So you can see not only your Vantage, but your FICO 8s, your FICO 542s, FICO 9s, your FICO, like every model of the FICO algorithm you're going to see and you're going to have. Yeah, you're going to have to pay, right? Depending on the company, you're going to have to pay. But the advantage of knowing your score, knowing what it is before you even sign your name on an application, that's big. And another thing, I put /maintain usage. If you have a card that you like, and I messed up, this is actually a mistake that messed me up a couple years back. If you have a card and you stop using that card, the bank may go ahead and close that due to inactivity. So you want to be careful with that. So just like we said before in the previous one, you have auto pay, you're paying on time, boom, you're paying on time every single month. That's a good track record. You don't want to lose that because you're like, all right, I'm gonna put this card in the sock drawer, forget about it. Like, make sure that whether you're putting $10 on it, $15, go to the gas station, put 20, like, find something. I have cards where Netflix pulls from one specific card. I know it's just a few bucks, but it's keeping it active. Make sure that not only are, like, when you're trying to repair, you have your monitoring, but even when you're at a place where you're good, right? You already have your car, maybe you already closed on your house. Have something where every single month you're paying attention. You're like, okay, this is what my utilization looks like. Or if anything out of the blue comes up and you're like, where did this inquiry come from? I never did this. Like, what is this? That could be potentially identity theft, right? So credit monitoring and maintaining, that's my number 3. Again, smart credit, my FICO. Some people use Credit Karma. That's not necessarily the best, but it's something. Just keep your eyes on something, and I think you're going to be in a better position. So that's my number 3, credit monitoring.
Sort of piggybacking off of that, my number 3 is know what's on your credit report. Look at your credit report. And I mean, that feeds into smart credit. And I'm sure, Joel, you'll put your link down for people to be able to opt into smart credit, because people be sleeping on that smart credit. But
I was sleeping on the smart credit up until last week. I was.
I'm amazed at how many clients, they don't know what's on their credit report. They don't know what their scores are. And like you mentioned earlier, you don't want to wait until you're needing to apply for something to get that surprise. And I do tell people, it's not just about the credit score, because there's so many different variations of the credit score. I mean, so many different, oh my goodness, don't even get me started on that. FICO, Vantage, whatnot. You need to know what's on your credit report, because you want to clean up your credit. You want to have healthy credit, and trust the process. When you have healthy credit, your score is going to be healthy, but you've got to know what's impacting the health of your credit. You're not going to know if you're not pulling your credit reports. And so, definitely, especially if you're getting ready to buy something in 6 months, your goal is to start looking at homes or get a vehicle in 6 months. Don't wait until month 5 to pull your credit report. Look at your credit report like month 1. Maintain that credit monitoring, through month 6 or even after, so that you know what's on your credit reports, and especially if you're cleaning up your credit. Credit Karma, I mean, it's convenient, but it's not It's not your credit report. It's not
Yeah,
your credit
yeah,
report. It lacks details that you're going to have with like a smart credit report. And what I love about the smart credit report is, I mean, you have 3 reports in one. You have your Equifax, TransUnion, your Experian.
mhm,
There's this Score Master Simulator. So, I was showing a client the other
yeah,
day, they're at like a 5 something, and we were moving the little indicator to see what it's going to take to get them to a
yeah,
650, and it told them here's what you will need to be paying off. And so that is a goal right there that they have. I mean, it'll help you so much. So
yeah. I like that one.
yeah.
Actually, matter of fact, I think you tried to put me onto the smart credit options like months ago, and I was like, yeah, yeah. I was like, yeah, that sounds good. True.
Yeah, yeah. And then you finally got co-branded.
Yeah. Then I got co-graded, and they were like, they were like, did you know about this? I'm like, no. I look. The only thing I ever did was I pulled the report.
Yeah.
I see what's on the report. I send out my disputes. Like I look at it that way. But the
Hmm.
fact that they have this little slider thing, I'm like, oh damn, that's kind of
They
nice.
got it
You just
all.
kind of
You can help
so
manage
yeah.
your money,
So
set you up on a budget and all that. So when Joel drops that link, don't sleep on that link.
yeah, it was nice. I give him that. I give him that. So where am I? Am I on my number two?
2, yes.
All right. So my number two was I think your number four. Um, Mine is utilization
Mhm.
slash the statement date. So
Mm.
we touched on the due date. The due date is, to me, I think that's like, I can't say it's the bare minimum, but that's like level one.
Mhm.
Auto pay, you got your credit card on file. Um, every due date is automatically being taken out.
Mhm.
The statement date, and we talked about this in, I think the video I did with Smart Credit, where it's like you have your due date, and let's say you pay it off because the due date, that's the date where if you're not paying that off, that's when they're going to start adding interest. So that's
Mhm.
kind of where everyone has like their radar on. That's cool. Pay attention to what your balance is uh, 3 or 4 days before that cutoff date, right?
Okay.
Because like how you said before, that utilization is so important, right?
Mhm.
Because so many people are just like, all right, here's my credit card, it's on file, auto pay, and then they're not thinking about anything else. But if you
Mhm.
go and 2 days after your due date and you're just swipe, 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 swipe,
Mhm.
spending it willy nilly, Capital One, Bank of America, whoever, they're going to say, okay, well, you're having all this activity. They're going to send it over to the credit bureaus, and the credit bureaus are now going to feed us into my FICO and Smart Credit and Credit Karma. And then you're going to be like, okay, why is my score not as high as it is? I pay on time, right? That's what
Mhm.
everybody has on every consultation. I pay on time, and then I'm looking at the utilization. I'm like, okay, do you know what your statement end date is, and are you keeping a mindful eye on
Mhm.
uh, what amount is being sent over to the credit bureaus? That I don't think they really take
Mhm.
advantage of that. I think the average person, if you're trying to just maximize your FICO score, your 3-digit FICO
Mhm.
score, not only just pay your due date, right? Pay attention to that date, but know
Mhm.
what your statement end date is and make sure
Mhm.
that you're comfortable with whatever amount that is. And as
Mhm.
we said before, 10% and below, ideally, right? If you can't do it, you can't do it. But whether it's 20%, 30%, however you
That's
can
it.
do it, right? Make sure you do that before the statement end date. Yeah, utilization. That's the second biggest variable when it comes to our credit score. Your payment history is first, and then that utilization is the second biggest. So that's my
That's
number two.
good because a lot of people they don't know, or they get confused between that statement date and that due date, and then
Hmm.
they're not realizing, when it benefits you. And Smart Credit will actually has a feature in there that shows you when you want to make your payment on your credit cards and how much in order to get
Yeah,
that boost in your credit score. So my
I just learned about that 3 days ago. So
yes,
yeah,
Smart Credit. So I'm gonna say my number two. Don't open up a bunch of accounts if you know you've got questionable credit. Don't go on a
that's a good one.
hard
That's a good one.
inquiry spree. I mean, you got a credit score that's like 600. So don't go applying for stuff. Like, fix your credit. And
Yeah,
while you're
yeah,
fixing your credit, don't go applying for a bunch of stuff because your credit score is only going to go down. We see this happen all the time.
yeah.
Someone gets a little bump in their score. They go from a 550 to a 620, and then they start applying for everything.
And then you
Their
start seeing a
score
whole
goes
bunch of
back.
inquiries. I'm like, where are these inquiries coming? Like, what's? Oh
The
yeah,
score
yeah.
goes. score goes back down and they didn't qualify for whatever they were applying for. Trust the process, let the process finish, and be patient. Yeah, be strategic about what you're applying for. Joel has a lot of great videos on credit cards to apply for, like he talked about earlier. Getting a secured card. If you're going to get a secured card, try to get it with like a credit union, or I hear a lot about that Navy Fed, but yeah, don't just go getting any old secured card. You want to be strategic about it so that it graduates you to an unsecured card with a reputable bank.
Yeah, and then when your card graduates, you're going to keep that history.
You
You
are.
know what I'm saying? So some people are like, oh, I don't want a secured card. I don't want to, like, when you're going to the credit bureaus, right now, they're looking at it. They're paying attention to the payment history. Like, they're not factoring in whether or not the card has rewards or is it a 2x point. Like, Equifax does not care about none of that. They're like, do you pay on time? Right? Are you late? Are you responsible with this money? And then, like, what's your track record? If I give you a $5,000 credit card, are you going to max it out, or are you going to, like, what do they always say? Like, the banks they're more willing to give you money when you look like you don't need the money, right? So if everything is maxed, and then you're trying to go to the next bank or credit union, trying to get a loan or trying to get another credit card, I'm like, well, you're not even taking care of what you already have, and now you're trying to apply. And then, like how you just said now with the applying, if your score isn't what it needs to be, because I know even some banks, like, you may not even apply or get approved for some of their secure products. That's a thing too. If you're not able to get approved from some of the links I talk about, like, go. I may do a video about this just specifically for, like, do I have that? Sometimes I lose track of what I've actually recorded or not, so I have no idea, like, what's actually on the channel. I'm gonna have to notate that for myself. Let me see. Hold on. we might have to do a little notation here for myself. I don't know what happened to my pen, but here we go. Hold on. I'm gonna do that. I'm gonna do all right. So basically, the reason why I'm saying don't continue to go to bank after bank after bank after bank, because the only thing that's going to happen is you're going to get more hard inquiries, you're going to get more denials, you're going to get discouraged. And then once you're discouraged, like, that's with anything. Like, you want to be like, oh, forget it, and then you're going to postpone it, and then another year is going to go by, and another year is going to, like, what I want from this video, I want people, like, the main takeaway is, like, do something. You don't gotta like pay down all your debt in 2 weeks, but paying down your utilization a couple $100, right? Not going out to dinner and just paying down your balance. Just doing that, and then let that be your game plan for the next few months. Just something. But I'm gonna do a video on that. Like, even if your credit is, like, super challenged, things you can do. And I have videos like End Rewards, Self Credit Strong, Navy Federal Pledge Loan. So there are tools, but I'm going to do one just specifically for those that maybe have tried to apply, but they haven't been able to find, anyone to give them some credit.
You have the secret lenders list?
I think I do, yeah.
Okay, that's a good list, because it shows, as your credit is getting processed, like, which bureaus pull. So, you may be able to get this good credit card that only pulls from Equifax. So then this credit card is pulling from TransUnion. This credit card is only pulling from Experian. And I say that because that leads into my number 2, which is having a healthy credit mix. And so, being strategic about this. I'm working with someone now, they have a very thin credit profile. And so even after everything gets cleaned up, I mean, we're needing to rebuild, like, right now, because their credit score is only going to get to a certain point, because they only have, like, one secured credit card. And, they did what I paid off their auto loan. So I told them, you're about to have a dip in your credit score, because unfortunately we are not rewarded when we pay things off early.
Did they already pay it down?
They paid off a car loan. So, and they didn't tell me. They didn't tell me until after they sent the check. It was gone in the mail. And I said, well, be prepared for that credit dip, because you don't get rewarded for paying off trade lines early, because now you still have, like, 2 years of payment history that is now not going to have anything paid towards it because you paid your car loan off. But it's temporary. It'll come back up. But in the meantime, we're looking at and I have that list. I can send it to you if you need it. But we're looking at, okay, which credit card, his Experian score is looking pretty good. So we're going to look at the credit cards that just pull Experian. He's got some work to do with TransUnion. TransUnion is hard. They're stubborn about some things. So we're not trying to apply to anything that pulls from TransUnion. So, but needing that healthy credit mix. What do they say? You should have 2 secure or unsecured cards, 2 major.
I always tell people, 2 to 3 revolving credit cards. I like to have 1 to 2 installment. So that could be a mortgage, that could be your auto loan. Most people have student loans, and it may not be in good standing. It may not be in good standing, but that's still history. Like if you're in your 30s or your 40s, and you got installment loans that are like 10 plus years old, like that history is literally supporting your entire credit profile. So you may have to do like a goodwill letter, you may have to do disputes, it's not always just delete everything off of my report, or do what do they do now, file the identity theft claim and try to do a credit sweep.
Don't do that.
Like if you got history, if you got accounts that are old, like several years old, and maybe there was a couple months where you were kind of shaky, like whatever, like especially now with COVID, like everyone has at least something, like some department where you can call and be like, hey, I'm going through this, like take advantage of it. Don't take advantage of these old trade lines that you have. So what did I say? Student loans, auto loan, mortgage, loans from credit unions. So like, those are examples.
Leave those student loans alone. How many times do we see people we see in the groups we're in, they all of a sudden they deleted an account and it score went down 100 points. It's like, did you delete an account?
You deleted your whole history and you're like, oh, my score didn't improve. Like you just deleted your entire background. Like what?
Yeah.
I don't know. I cut you off. Continue with your.
That's it. That was mine. Just having that healthy credit mix, and you touched on. I think people don't understand the importance of that. Like you said, the payment history. Like even if you have 3 or 4, late payments, it's history. That history accounts for so much of your credit score. It's best to try to get the late payments removed versus I'm going to get this account deleted. You don't want to do that.
Yeah. That's the thing. And it's always funny, like some people are like fighting tooth and nail, try to get rid of some accounts. And then the bureaus are like, they're not budging. Then somebody may do send one letter and then something's removed, but it's the wrong account. So, but I think that might be a video for another time where we'll talk about not only how to read the credit reports, but what to actually attack, what to challenge.
That would be good.
That would be a good video. So I'll put that on my list. Matter of fact, let me put that on my notes since I have my notes here. That'll be part 2. So that leaves me on my number 1, which is patience. That's my strategy.
Yeah.
So like I said, do not just pull your credit the day or the week before you try to buy something, man. Just don't do it. Like you're putting yourself, you're adding, the home buying process is already challenging. You got your inspection, you have your appraisals, you're dealing with your realtor, dealing with your lender. You're dealing with, especially in this market, highest and best. So you might have to put multiple offers on a home before it's even there's so many BS things that you got to pay attention to anyway. Make sure your stuff is on point. Before you start calling people. Get your report and just see where you're at, right? Just see where you're at. Even if you're living in a place right now, let's say you're renting and you love the place where you're renting, or you paid off your car, you're good, still do, because you have no idea what your life is going to look like 12 months from now. Anything happen, you might have to move because of a job. There might be an illness in the family. You might have a crazy landlord and you're like, I got to get the hell out of Dodge because I got to leave now, right? Anything can happen. So if you wait for the event to happen to be all right, now let me see what's don't wait for that thing to happen before you get your ducks in a row. Get everything now. So even if you think well, I'm chilling right now, I'm good, I got a good job, still get your reports, see what's on it, If there are stuff that is not where it needs to be,
Mhm.
do the things that we already talked about. Send out your good with letters. Um, contact either you and I, because we both do different variations of consulting and credit repair and this whatever. Between you and I, we can pretty much do anything. But find somebody to help you with it. There's a lot of DIY. I think you have. Matter of fact, I'll get you a link because you have a DIY product that's pretty dope. Um, do it now, and
Mhm.
then you're going to see like in 2 3 months, a few things may just naturally fall off. Then
Mhm.
you might see, okay, maybe after month 4, month 5, something else may come off. You
Mhm.
might find out that maybe after month 6, month 7, some things are just so stubborn that you may just have to do a pay for delete. Like
Mhm.
you might have to
Mhm.
go that route, but it's cool because you got rid of 4 or 5 other things, and you maybe
Right.
you only have to just pay off 2 things, right?
Mhm.
If you wait for the last second, you're going to have to be like you're going to be more pressure to try to pay off everything at once. So
Mhm.
now you're trying to settle with this person and this person and this person, and
Mhm.
then 6 months from now, 12 months from now, 18 months from now, when it's time to buy the car or renew your lease or buy the home,
Mhm.
the process is simple. Because I can tell you the home buying process when your score is like above 720, above 740, how smooth that is,
Mhm.
the type of lending product that you're able to qualify for, versus if you're like in the 580s and now
Mhm.
your lender is trying to work magic with your DTI to get you to qualify
Mhm.
for, like, make it easy for yourself and just do the work beforehand, and the ending is going to be a lot easier. So just be patient and start early.
Mhm.
That's my
Yeah.
number one. Start early.
So piggybacking off of that, my number one would be trust the process, trust Joel with what he's saying. You're talking to someone, you're learning from someone
Yeah, trust the
that is
process.
a former realtor who saw people get in decline, and that was one of his motivating factors for getting into credit repair. I love that. I wish I had that background. But
Yeah.
yeah, I mean, it's very insightful. I mean, we're in a competitive enough market as it is. So trying to go get things when your credit score is mediocre versus someone that's got that top tier credit score, I mean, you pay
Mm-hmm.
more in the end.
Mm-hmm.
You pay more to have bad credit. It's sad. It's not fair. I don't agree with it. Joel doesn't agree with it, but it's the way it is. You have a low credit score, you're going to pay higher interest rates. They want you
Mm-hmm.
paying higher interest rates. Car dealerships, they kind of bank on you defaulting on your payments, and then they get the car back, and then they resell the car. It's a vicious cycle.
Mm-hmm.
So find that person you can trust to help you with your credit. Yes, there are DIY products, and I'm all for the DIY route. Even with the DIY route, you've got to educate yourself on credit repair, the credit laws, because again, something that Joel and I see a lot, people are shooting off these letters to the credit bureaus, to the debt collectors who really are debt buyers, and then you get a notice in the mail to show to court because now you've been summoned because you kind of woke up what I like to call a sleeping bear. You didn't realize that
Mm-hmm.
your collections is now with the debt buyer. And the whole debt buyers, they own your debt, and they are waiting to find out kind of where you are so they can sue you. And a lot of people don't understand that difference between a debt buyer and debt collector. So that's the one advantage of working with Joel is he's gonna be able to help you figure out, okay, which accounts to attack, which accounts to update, which accounts do we really need to strategize because it's with the debt buyer, not the debt collector. So
Yeah.
he's kind of got that education for you, and just knowing consumer laws, the violations. Debt collectors, they bank on the consumer not knowing, and so they do things they're not supposed to do because they 99% of the time they're not going to get caught because you don't know as a consumer. They're not
Yeah.
worried. But if you can catch them in a violation, that's a easy $1,000 for you. You can take that $1,000 to actually pay off the debt, get it off your
That's
repair.
another topic that I wanted you to, because you're much better than I am on that one with the was it the FDCPA and all those.
FDCPA, Fair Debt Collection Practices Act. You have the FCRA, the Fair Credit Reporting Act. I just kind of got more into the FDCPA, the Fair Debt Collection Practices Act, with the debt collectors, because a lot of people are they hide from their debt collectors, are kind of scared, intimidated. But no, there's no reason to be scared of a debt collector. I mean, you know, there are certain things that they know they're not supposed to be doing, but they do it because they don't think that they're going to get caught. And
Yeah.
so learning
No
some
one's
of
going to
those,
hold them accountable.
Yeah, exactly.
Mhm.
And then, trusting the process. Credit repair is not overnight. You won't hear Joel or I guaranteeing anything or saying we're going to have you cleaned up in 30 days. The goal of credit repair is to get as much of the inaccurate, incomplete, questionable, just plain in error items that are reporting as such on your credit reports removed. It doesn't remove your responsibility to pay the debt, but you are entitled to a credit report that is 100% accurate. And what did they say? One out of what? Five, one out of three, one out of five consumers have at least one error on their credit reports. And
Mhm.
I don't care if the letters that Joel and I are sending to the credit bureaus and collectors are 1 page long or 20 pages long. They have an obligation, a duty to read the request and process them accordingly. And that's something else they don't do.
No.
They send those stall tactic letters. No.
Yeah. Actually, I scanned one, I think, 2 weeks ago, and I just read it. I think it was from TransUnion.
Yeah.
It's so, you know what?
Everybody and their mama is getting a letter right now, whether you send a letter with 3 lines and you've really written it as a consumer, or you're, utilizing Joel's service or my service to help you. But what TransUnion is doing, the whole stall tactic letters with any of the credit bureaus would not stand up in court if you were with a consumer law attorney. TransUnion, what do you mean you didn't take the time to read the request? Like, how are you
Yeah.
going to respond, TransUnion? So, trust the
Yeah,
process.
CFPB, I did a video on that one on CFPB, and just I think after COVID, I think it was 2020, it was the bureaus, it was like the rate of how many that they were resolving, and it
Mm-hmm.
went from 25%, basically like one out of every four challenges or whatever, which isn't even that great.
Yeah.
And I think it went to something like abysmal. I know it was sub 10%. I forget the statistic,
Yeah, it's a
but
very small percentage. But I mean, there's a reason the CFPB is suing TransUnion right now for deceptive practices. So you have to trust
yeah.
the process. Don't give up. Um, you know, if you are kind of afraid to do your own credit repair, because there's a right way to do it and there's a wrong way to do it. And Joel and I see, I mean, a lot of people and even some of the credit repair agencies doing things kind of the wrong way. And, if you don't know what you're doing, you could make things worse for you versus better. So we're here to just kind of teach and educate you on the ins and outs. We don't sugarcoat, we don't hide things. We're going to just tell it to you as it is. And we don't proclaim to know everything. We're still learning because this is a lifelong learning process, as we found out. Seems like technology, every few months, something new is coming out, some change is
Yeah,
coming out.
always,
So we
always.
keeping up with that stuff and, sharing that with you guys out there.
That's dope. That's
Yeah.
dope. So I already went through my five. I think you have more. So I don't know if you want to go and get extra credit or give the people what they want, but I already gave you
Let's
my five.
see. I think you talked about the goodwill letter. I'm going to just kind of talk about that as well. I mean, it's so important to communicate with lenders. If you know, like, you're challenged in making payments, don't ignore your lender. Don't pay late. Communicate with your lender. Let them know the financial difficulty you're having. See if they'll work. See if they'll extend or move your due date, or they'll mark your account.
Hmm.
Um, I don't like sell this, but with a credit card, if you're a day late, or you're late past your due date, you have up to 30 days before they actually mark it on your credit reports, before they report to the credit agencies. So
Hmm.
the bureaus. So yeah, you may get a late fee, but try to make that credit card payment before it hits day 30 after your due date, because then it's going to go on your credit reports. And it's harder to get late
Hmm.
fees, late payments removed, especially when they are fresh. I'm dealing with that now, and we're
Yeah.
having to go back to the original creditor and kind of beg, like, please, client was going through some really hard times, and had the client talked to the company, before it got to the point where it's late now on the the
Hmm.
the, credit reports, then it could have been a different scenario, different outcome. So communicate. And if you do have late payments on your credit reports, maybe ask the lender. I mean, you don't know if you don't ask. Ask the lender, hey, if I make 3 payments on time, can you please delete? Um,
Hmm.
you'd be surprised. I mean, creditors have the ability to pull collections back unless they've actually sold the collection account and it's typically to a debt buyer. They can pull the collection accounts back. I worked for a company where I wasn't a collection agent, but I was working with our internal collection department, and I'd have them
Hmm.
pull clients' files back, like pull that back. We're trying to work something out with this
Yeah.
client. Get it off the credit report. They can do that. You know, it's
But I think you hit it on the head. I think communication, because I think some people just sometimes you're just scared to communicate, or if you think like, all right, maybe I hit a hiccup this week
yeah,
with my finances, like we're so tempted to bury our head in the sand and be like,
yeah,
oh no, when especially when we started off by talking about like building a relationship. If you
hmm,
have several years with a financial institution, they can see like use your history to benefit you. If you've
hmm,
been doing what you were supposed to for month after month, year after year, and you go through a speed bump, you can use that. You can
yeah,
use that, whether it be over the phone.
mhm,
Ideally I like it in writing, but
yeah,
use that. Hey, this was just a bad month for me. This was just
mhm,
a once in a lifetime situation.
yeah,
9 times out of 10, they're gonna do something. They can work with you. That's not to say like
mhm,
you have a late here, then 60 days from now you're doing it again, then 60 days. Like it
mhm,
can't be a habit.
mhm,
But if there are some circumstances that, like, life happens to everybody,
mhm, mhm,
and they're going to want to keep you as a client, especially if you're
mhm.
doing everything the right way. So
Right,
I just say communicate whether or not you think it's going to work,
exactly.
whether it's a 10% chance it's going to work.
Yeah.
Just before it goes to the bureau, like how you said, before it hits and it
Mhm,
dings your account, there's
mhm,
absolutely nothing wrong with just picking up the phone and saying like, hey, this is my
yeah,
situation. Is there something I can do? Can I put this down, and maybe
mhm,
you can try it again in 2 weeks? Like,
mhm,
just communicate. So you are right about that.
yep.
That's a good one.
Bad credit doesn't make you a bad person. I mean,
Yeah.
Joe and I, like we've mentioned early on, we both have had bad credit. We weren't bad people, but things happened. Got behind on some payments. I mean, most of us aren't even taught about this in our homes and in our schools, which I think we should have. I think schools need to have a
Yeah.
course starting at elementary on credit and just budgeting. But doesn't make you a bad person because you have bad credit. And the good thing about bad credit is you can turn it into good credit. When you take control, when you start taking
Hmm.
responsibility for some of your spending habits, when you are proactive and active in your credit repair and paying bills on time, you can get yourself to a better position. You got to take some action. You know, bad credit's just not going to get better on its own. You got to do some things about it. And so there may be some
Hmm.
sacrifices you have to make. I've told some clients, may not be able to get those nails done. Like, let's take that money and take that money. And those have been some hard conversations. Let's take that money and pay down some bills.
Listen,
Hold on, yeah.
everybody has something that they can reduce and cut off, right?
Yeah.
Eating out, right? Subscription services. I'm paying subscription services that I don't even know what's coming out of my account half the time. Like
Look at your
there are
bank
things that we
statement.
can we can
Yeah.
reduce it and just put a little bit. Like, again, it does
Mhm.
not have to be everything in one day.
No.
It doesn't
Because
have to be that. Just do something.
it can be overwhelming. You
Hmm.
have some debt going on, your credit score, it's kind of a downer, and then just don't even want to look at it. Because I remember being there, I didn't even want to look at my credit reports until I went to the dealership to try to apply for a car, and they were like, oh,
Yeah.
499. I was like, what? I wasn't looking at my bank accounts. It was kind of all in my head, and I just knew I had bad credit. And
Yeah.
once I started taking control and action, and now I look at my bank reports like I'm looking at my bank statements on a weekly basis. You can go online and look at them because I just want to make sure I'm looking at these charges. And like you, I've
Hmm.
cut some subscriptions out, just things that I'm not using. And like, why am I paying $10 here? It may not seem like a lot, but them little $5, $10, $20 subscriptions
They add up.
add up. And I think last month I found like over $100 in subscriptions to cancel because I just wasn't using them. And I'm like, that's
Yeah.
$100 that I can use towards something else that I do need. So don't be afraid to
Hmm.
look at your bank statements. Yeah.
Yeah. I think there's an app that helps you with that. I think is it
Mint.
Truebill?
There's a
Mint?
Mint. Mint is a
Mint?
great
Yeah.
app.
Mint is good.
I use that app. And then also, if you click on the smart credit link that Joel's going to provide, there's a tool in there that will help you. You can actually sync your bank accounts, all your credit accounts with the smart credit tool. And I mean, it's going to help you with budgeting, with formulating a plan. I mean, you got to pay attention to your finances. So it's an all-in-one tool, smart credit.
That's official. All right. So we are approaching 53 minutes. That went by pretty quick. That was pretty
That
cool.
was going to be like 20 minutes, and then we're like, "Whoo, we got some stuff to share."
Man, there's some stories. I feel like I'm in therapy or something. I'm like, yo, and another thing,
We could go on and on and on, but
and another thing. These damn bureaus. Oh man. But no, so what I'm gonna do, plug all your social media stuff. Plug all because I know you're bigger on TikTok, and even though I downloaded the app, but I
I'm
never got on
trying.
TikTok.
You're YouTube. I'm TikTok. I'm trying to get to
Um,
YouTube, but I'm like, whew, I'm really more
you
introverted.
what?
So the little 1 minute videos work.
I like YouTube because I'm more long winded. Like
Yeah.
I'm an introvert as well, but I'm long winded when I'm trying to like deliver a point. So there's no way I can just be like 60 seconds. Like no, like give me my whole 10 minutes.
I will tell you that TikTok now, I think I got notification my videos can be up to 10 minutes. But the
TikTok can go to 10.
average attention span on TikTok is like a minute is pushing it.
Yeah, TikTok is like 30 seconds or less. Like you just want to see something, swipe, see something.
Pretty
I
much.
like YouTube because I like to just consume information, even if I'm just like playing video games or whatever. Like I'll have something playing in the
Yeah.
background, like longer format, like podcasts or whatever. So yeah, I'm gonna stick with YouTube. So maybe one day I might join you on
Cross
TikTok.
over to TikTok, and maybe one day I'll come onto YouTube. I'm gonna try to do a short TikTok credit repair. We're gonna see how
Man,
that goes.
I don't know how to do that.
It's
But
gonna,
what we're gonna do, I'm gonna feature you again here anyway because I like this content because I like perspective.
yes.
Seeing something from just even if it's like a slightly different perspective.
Mhm.
You know, I may say it one way and it just might go over somebody. Say you might say it another way. They're like, that's what he meant by it. You know,
Mhm.
that's
I
how it is.
appreciate
But
you on everything that you're teaching. I watch your videos because I we know how to do the credit repair, but I had to kind of get savvy on building credit because that's something that people miss out on is that building credit part. And you talk a lot about building credit. That is so important. It's one thing to repair your credit, but it is not enough. You've got to be building
yeah,
at the same time you're repairing. So you got to
you
listen,
got to.
watch Joel's videos. The guy knows what he's talking about. He's got
Because
your back.
if you repair your credit, let's say you even do well, here's an example. Like if you take somebody who's just like 17 years old, 18 years old, right? They have nothing bad on their credit.
Mm-hmm.
They're not going to be able to go ahead and get this funding like how you think, like
Mm-hmm.
because whether they apply online through automated underwriting or they go to like a big branch, like an underwriter is going to look at their profile. They're going to see like, okay, you want me to give you money?
Mm-hmm.
Let me see like, has anybody else given you anything? Let me see. How do you take care of your $500 credit card?
Right.
Oh, you're maxed out every month and you're late every other month, but you
Mm-hmm.
want me to give you another 5 grand? Like, no. So just repairing credit. Like I don't even like the phrase like repairing
Yeah.
credit because it doesn't pick the full picture of what you're trying to do. Like we're
Credit
building a
restoration.
it's restoration, but you want to
Yeah.
build a credit profile. Like you
Yeah.
want it to be you want it to be so like if somebody looks at your credit report, they're not just saying, oh, there's nothing bad here, but it's like
Mm-hmm.
you want your credit profile to tell a story if you're
Mm-hmm.
not able to tell a story.
Mm.
Meaning like if I look at your credit report, it's telling me a story whether you think it is or not. I can tell if you're responsible, even
Mm-hmm.
if you let's say you typically are responsible like on
Mm-hmm.
an average day, but I
Mm-hmm.
can tell like how do you treat your money? How do you treat your bills? How do you treat other
Yes.
like people look at banks like they're evil people, but they got to make money. They lend out money,
It's a risk. We're taking
so
a risk.
it's a risk for them,
Yeah.
and that's why you have the FICO algorithm. Like it's
Mm-hmm.
all risk mitigation.
Mm-hmm.
So if we're burning bridges, and we're
Mm-hmm.
burning Chase, and we're burning Amex, and we're like,
Mm-hmm.
why would like if I had a reputation of I borrowed from my friend over here, like we were all in
Mm-hmm.
school, and I borrowed from my friend over here, and I don't pay anybody back, and you are aware of it. I'm like, yo, Tanya, I need a couple grand.
Right.
You want to give me? You're gonna look at me like, boy, what's wrong with you? You didn't pay her, you didn't pay him. I'm not giving you nothing. Like,
You've got to give the banks a good reason, and it's within your credit report as to why they should lend to you. And then the thing I know you've seen, Joel, is when people are in the process of getting those deletions off of their credit report, sometimes your scores will dip. It happens,
yeah,
and you've got to be able to have your credit rebuilding in the process, because if you do, I mean, for example, a charge off, you cannot bring a charge off account back to a good standing. You've got to just delete that account. And
hmm
if it's a credit card that was charged off and there's like 5 years of history with charge off, you just that's something you have to get deleted. Well, you get that deleted, your credit score is going to go down because you've also deleted 5 years of history. But if
Mm-hmm.
you are rebuilding and getting points through the rebuilding process because you've opened up, some secured cards, well, it'll offset that decline that you've taken when you had that charge off removed. We see that a lot. People don't rebuild, but they get stuff deleted off of their credit reports, and then their scores go down. And then there's this mad scramble, like, oh my God, I'm trying to buy a house here in like 3 months. And
Mm-hmm.
gotta quickly find something to build it back up with. But if you're doing both simultaneously at the same time, you're gonna be all right.
Well, I'm glad you said that because when you go to, I think it's Credit Karma. I haven't logged into mine in a while, but it'll show you like average age of credit,
Mm-hmm.
and then all of the well, it'll say average age of credit, and I think it might say like number of accounts or number of derogatories. Like it'll be either in yellow, green, or red, right? Average age of credit for a lot of people, they're not green just because,
Mm-hmm.
like how you said, like the oldest account that they had, whether it be the student loan or the charge off, they removed it. Cool. You took the bad off, but you also took the good.
Mm-hmm.
So while you're doing all that, I think that's why I had the first thing on my list was the secured card.
Mm-hmm.
Even if your credit is shoddy, like it's all the way down. If you got $300, $500, and you're able to get one secured card, or even two secured cards, you know you're going to get that money back.
Mm-hmm.
You have those secured cards. As you're trying to dispute and you're doing your pay for deletions and you're doing all these things in the background, those secured cards are slowly aging,
Mm-hmm.
right? And I don't want to go over authorized users because that's going to be another video. See, we got too many topics that we can't.
We got all sorts
No,
of tips and
no, this is look. We're already at an hour, man. We gotta cut this. I can't give
we'll be
everything
a
just
part
in one
two.
tip. We're gonna do a part two because I got to talk about that authorized user because people think that's like the cheat code of just like banks are just like, oh, okay, well, we don't know what an authorized user is. Let me just put an authorized user on my account, and I just tricked Bank of America. They're not going to know what. Like, no,
Some aren't even considering authorized users, and I know I talked to someone that
no.
is in the same world as you, realtor, and they're like, lenders, unless you have 6 trade lines already reporting on your credit report, they won't even consider the authorized user as
They
a
won't.
trade line. So yeah,
They will
another
not do
video.
that. They will not do that. The lenders,
Yeah.
they will pull FICO 5, 4, and 2. Those
Mm-hmm.
that's the old school, like archaic model.
Mm-hmm. Mm-hmm.
So when you do stuff like authorized users, and when you do stuff like rent reporting,
Mm-hmm.
like all these like new school modern things,
Mm-hmm.
like it might work for the newer school models, but the lender, they're going to look at that and just strike.
Yeah.
Like it does not exist. So
Mm-hmm.
don't think that you're going to skip over the year after year of having a primary in your name, not your mom's name, not your spouse's name, not because you paid somebody online to get an offer. Like they're
Mm-hmm.
looking for a primary trade line in your name because they want to see who's responsible for this.
Mm-hmm.
Who's paying every single month? Is it you or is your mama? Because even if I did look at it like a human being, it's going to say, well, your mama is paying on time. You're an authorized user on account. What are you paying? Like, do you have anything in your name
Mm-hmm.
that can show me that you're going to pay me back? If you
Right.
don't, then it's like, but anyway, that's going to be another. See, you're going to have me on a tangent now.
I'm saying if you're trying to buy a house,
I mean?
you need to get your credit right. You need to get with Joel because, like I said, he's a former realtor, probably still got one leg kind of in for the knowledge, but he knows what the lenders are looking for because he was on the other side as a realtor. He saw people getting declined. He saw why. Now he's over in credit repair, trying to help people to not get declined and to get the best for their bang when it comes to getting loans. And I think what the rates are going up, so credit health of your credit scores are more important than ever.
Rates are going up. Oh, Wells Fargo. Did you see the video I did on Wells Fargo and
I did. It's really unfortunate. It's
you know what? When I say as I'm recording the video, I'm pissed. Like I'm pissed as I'm. But
I
again,
got a car loan from them. I'm like, ugh. Yeah, no, I've known people that have had perfect 800 credit scores, credit history, no reason why they should get declined. It's video. That's a third video. We'd be all mad by the time
we'll listen to that.
Yeah.
That'll be the third one.
But when you have great credit, you will have options versus when you have limited credit, you're going to have limited options as to which banks will want to work with you. And I think Wells Fargo, they'll work with you to get you that car loan with that high interest rate, but you don't want Wells Fargo to be your only option, or they may not work with you. You want to be able to go to some of these credit unions. Credit unions can be your best friend when it comes to
many times. Most often than not, because their guidelines are going to be more lenient. Like Bank of America, Chase has the 524 rule. Bank of America, they're historically conservative.
Right.
U.S. Bank they're pretty conservative too, especially with inquiries. Like the reason why I push Navy so hard, not because it's just popular, but I've seen people with like their credit is just on some like other, and they're still getting qualified. They're still able to open accounts. Discover it. Sometimes like their score may not even be bad, but Discover may just say nope. Like other banks just might be like, no, even for a security card. But if you're able just to get into a door, that's why I say like don't burn bridges, keep the communication. Like everything that we've been saying in this whole video, like if you have an institution like a Navy Federal, whoever that you've been with for years, don't burn that bridge. Like keep them, because you never know when you're going to need them. Because you never know if somebody else is going to act a fool. Like you don't want to have all your eggs in one basket. Like that's why I do so many videos on different institutions. If you can have 3 or 4 different credit unions, and then you got a couple of Amex cards, and then you got a Bank of America card, and you got like, if anything happens on anything, you're not just stuck.
Right.
Like, you're not just stuck.
1, 2, 3. You got to have options.
You got to have options. All right, so that's what we're gonna wrap it. We're gonna wrap it at hour 104. You didn't even put your TikTok, what do you call it, handle?
Oh, okay.
What is your? I'm gonna end up putting it like on.
You can find me at 720 FICO on TikTok. 720 FICO, FICO.
720 FICO. I'm gonna end up putting the link somewhere in the description.
You can, because I'm a little link challenged and technology challenged. So.
Don't worry, we're gonna take care of it. Everything that we talked about in this video, I'm gonna put it in the description.
Perfect.
But aside from that, this was good. We're gonna do the sequel, man. So go down in the comments. If you made it this long, shout out to you, man. This is like a full podcast. We might have to call this the podcast, the Tangent Podcast Hour. But anything that we talked about on this video, if you want us to do a deeper dive, or something that we didn't discuss that you would like to see us do, like a more a longer, because like on TikTok, you can't do something like this on TikTok. You can't just like stretch it out and then just show like all the angles of it on TikTok. TikTok
you can't. That is the limit to TikTok.
So this is why I like it. So, but again, if you are watching this and you are looking for something that's like, I need to know more information. We already talked about FDCPA. We talked about, there's a lot of stuff that we can talk about. So just let us know. Otherwise, I'm just gonna freestyle it. And aside from that, man, just like, subscribe, do all the stuff that every YouTuber tells you to do, man. Subscribe, hit the bell notification, and that's it. We're going to catch you in the next episode, maybe in a few days or in a week. I don't know.